Do you think you would have made the same move if you didn't own real estate? Like, let's just say like you're starting it now.
Yeah.
Right?
Like,
would you still prioritize real estate first to build wealth?
To build wealth.
Would you even think about the stock market before you bought a house?
To build wealth, that's my goal.
Well, like you want to buy a house ultimately. Let's just say you're
It's like that's to live in. Like I don't think buying a house is something to build wealth. Buying a house is something you do to build wealth. Like it's something that.
But that's what in Canada. There's this guy. His name is like Jim something. This Asian guy who he retired at 40 years old off of buying U.S. equities and U.S. real estate. Because he bought U.S. real estate in the 07 crash. And he bought the houses outright in cash for like $25K.
Gotcha.
No one was buying houses, right? In the U.S. at that time. So he researched, he wanted to buy property that wasn't seasonal. He wanted to buy an area that wasn't seasonal and had lowest crime rates. And he just bought up the entire neighborhoods.
That's kind of similar to what Robert Kiyosaki did.
Really, eh?
Yeah, like during the 07, 08 crash. That's how he became a billionaire.
Oh,
like he pretty much.
But he's really big on gold.
Yeah,
right?
yeah. Well, like that's the thing. Like,
but he also says a lot of crazy shit now. But I think it's for engagement farming.
If you look at today, like today's environment and economy, like real estate was something that was used back in the day to build wealth because it worked.
Yeah.
Right. Like interest rates were like even if they were higher throughout history, like home prices weren't outrageous.
Yeah.
But after 07, 08, like the system reset.
Yeah.
Like the monetary system reset. Like the Federal Reserve came in, they bailed out a bunch of the banks, they let Lehman Brothers fall. They kind of reset the market in a way where like today, if you're looking to build wealth, like a home is nice to have. Like it's a sick place to live.
Yeah.
Like you want to protect your family.
And you can control it. If you can comfortably afford it, you
Correct.
can control your cost of living.
Exactly.
Right?
Like, and for those reasons, you would buy a home. But if you're looking to just make money and build wealth, like a home is not the way. Like,
and bro, trust me, everyone I talk to, like that is what the mindset is. Buy a house.
You build wealth.
No. You don't buy a house, you're poor.
No, but that's
what I'm trying to kind of.
So like
the message I'm trying to send here. If
like, you look at like home prices, if you look at the S&P 500, if you look at all these things on a chart, for example, over the last like maybe 100 years, right?
Yeah.
And you like
let's do 50 years.
50 years, sure. 50 years. If you look at all these things over the last 50 years,
what's the rate of return on a principal residence?
Yeah, well, not even rate of return. Like if you just look at the cost, but instead of doing it by dollars, you put the chart doing it by gold.
Okay.
For example, like you do house prices in gold. You'll notice there's not really much appreciation. There's almost nothing.
How about a Toronto?
Maybe a little bit, but I mean, it's not. But you're pricing it in gold. In 1980, if one gold bar buys you one house, that gold bar will probably buy you the same amount of house today.
Got it.
What's happening is that there's just currency debasement. The system is just racking up more and more debt.
Yeah.
It just costs you more and more dollars to buy that same asset. So like the reason why things cost more and more is that like wages don't keep up with the rate of inflation and debasement.
Yeah.
Like the U.S. government has what, $35 trillion of federal debt today, and they're the reserve currency of the entire world, right?
Yeah.
So like the game now has really become more about like just what to do to maximize your purchasing power over the next like 10, 15 years. Because what is wealth?
Yeah.
You're trying to preserve purchasing power.
Yeah.
You're trying to delay what you can buy today to buy tomorrow. You're trying to have a better life tomorrow than what you have today.
Yeah.
And in order to do that, you need to get in front of the assets that are impacted most by the debasement of currency. So like if you look at that chart that you're comparing asset prices over the last 20 years, and then you account for, you know what M2 money supply is?
No.
So M2 money supply is the liquidity in the financial system.
Yeah.
It's the amount of like physical, like liquidity in the system.
Okay.
So like liquidity works on like a 4-year cycle. So it follows like the business cycle, it follows the election cycle. So because of this crazy amount of debt, every 4 years, the debt has to be rolled over. It has to be refinanced with like new debt that they issue to create this debt. So like people will constantly be getting more and more left behind unless you get into the assets that are affected by the debasement the most, that go up the most. So you're looking at like tech stocks. You're looking at like cryptocurrencies like Bitcoin, for example. If you buy a house, you're going to do okay, but you're probably keeping up with the amount of debasement. Like if you buy gold, you're probably like doing a little better. But like you need to get into the things where the liquidity is essentially going to be coming in from when the governments print the money and like they flood it into the system.
Oh, okay.
So are you a fan of Bitcoin? Like do you?
I've heard of Bitcoin. I believe in it. I just currently don't have any position in Bitcoin.
So let me show you something interesting. So like there's an exercise I did. So like we'll go on ChatGPT right now.
Okay.
We'll ask it a simple question, right? So let's ask it. What are the fundamentals of money? Fundamental characteristics of money. I did this exercise like I think like a week ago. So here's what ChatGPT says. Well, these are like the characteristics. I'm just gonna call out the main ones, right? Durability.
Yeah.
Money must be able to withstand physical wear and tear. right? Next one is portability. Money, you got to be able to bring it with you. It has to be portable.
Yeah.
Divisibility. It must be possible to divide it into smaller units.
Yeah.
Uniformity. Every unit of money should be the same as every other unit of its kind. So it's like it's uniform across the world.
Yeah.
Acceptability. Money must be accepted, wherever. That's what makes it a good money. Limited supply. To maintain value, the supply of money should be limited or regulated.
Yeah.
Store value. So it should store value across like years or time frame. And then those are the 7 characteristics. What do you think fits that build?
Bitcoin.
Correct. There's nothing else. I'm talking about it as of a store value asset. So I'm talking about like what is the best way to preserve your purchasing power.
Got it. Okay.
Like preserving purchasing power.
What would you? How would you compare tech in buying tech stocks versus Bitcoin?
I feel like they're similar.
They're similar.
They're similar. I personally am more of a Bitcoin guy. Like I believe in the asset itself because it's a decentralized form of currency that can't be manipulated by the government. You can store it yourself.
Yeah.
I think BlackRock or MicroStrategy are probably the biggest holders right now.
Of Bitcoin.
Bitcoin,
Yeah.
Bitcoin is like built from the ground up, right? Like for example, when companies go public and IPOs and stuff, you need to be like an accredited investor to be able to like buy those first rounds of like funding and all that, right?
Yeah.
Bitcoin is the only
for the people kind of thing.
It's for the people. It came to the people before it came to the companies.
Yeah.
If you look on like returns of assets over the last like 15 years,
for sure.
and you look at a chart,
it
is the best performing asset. It's about like it does better than Nvidia.
Yeah.
Like if you look at it, like it is
over the long term.
Over the long term, it is the best performing.
How has it done this year?
I think it's up like 150% or something like that. It's right now. It's at 86 grand Canadian.
Oh, okay.
At the bear market lows, it went all the way down to like 23.
Yeah.
So like now it's at 85.
Yeah.